Renewable, who's joining us from the KP Group. Hi, Mr. Farooq. Thank you so much for joining us today. Well, firstly, we do see the EBITDA margins that have improved to 35% from an earlier 34%. EBITDA has in fact improved almost. It's almost improved 19% on a year-on-year basis from the last fiscal. How sustainable is this margin, particularly as the company scales its IPP and the CPP businesses?
Good afternoon, Ankita, and thank you for calling us inviting us on call. So, as you have properly said, that EBITDA margin of our group, of our KPI Green, is maintained properly, but because of our IPP portfolio have energized recently. So, you have to understand some points about the IPP portfolio. In IPP, whenever your projects gets commissioned, after that you required some stabilization. You have to give some stabilization period to your projects. So our projects have energized recently only, and all depreciation have been taken and financial cost have been taken. That's why you are seeing decline in the profit margin.
Right. Hi, Afan. Nupur this side. Now, your portfolio has grown about 71% YOY to 6.94 gigawatts, but only about 1.87 gigawatts is currently operational, while about 5.07 gigawatts is WIP. Now, what is the execution timeline for this large WIP portfolio?
Any large scale project in renewable energy have the timeline of approximately, it range from 18 months to 22 months. So we have got this, we have backed this healthy order book, which you are seeing on our books, have been backed recently only. So it will be executed between 18 months to 22 months, and you will see the revenue numbers. These numbers will be reflected in terms of revenue within this range, and our approximately 4,000 plus crores of order book you will see in terms of revenue, and also you will see our margins will get improved as our project will get commissioned and as our project will start getting stabilized for going further.
Right. Also, Afan, you booked 2.8 gigawatts of orders and commissioned, 0.85 gigawatts in Q1. Can you give us a visibility on how much of the order book can translate into revenue and EBITDA over the next 12 to 18 months?
More or less, if you will see, we have backed this order before 6 to 8 months. So within 1 year, you will see 85% of this order book will be converted will be energized. If we are talking about IPP, will be energized within 12 to 12 years, 85%. And after taking its stabilization period, you will see that its revenue will be also get realized within 12 to 14 months, about 85%. So 2.8 gigawatt approximately, you can calculate that 2.2 to 2.3 gigawatt will be commissioned within the span of 12 years.
All right. So the CPP portfolio grew by 87% to 4.3 gigawatts, much faster than the IPP portfolio. Now, is the business increasingly shifting towards CPP, and how really do the economics and the margins compare between the two segments?
Between two segments, we cannot compare EPC versus IPP because, as you know, IPP has a higher margins. IPP have 85%, approximately 85% of margin, and in EPC the margins are lower. Why you are seeing that EPC is increasing? EPC is increasing because of the industry itself. EPC businesses are increasing. As you will see, our clientele bases in EPC are government is supporting renewable energy. That's why NTPC, SJV, and Coal India. You will see we have got order from these all PSUs entity. As you know, India is the one of the world's largest potential in terms of renewable energy. So and we have the very aggressive planning in renewable energy, because till 2047 under the Viksit Bharat Yojana, India wants to be the 30 trillion economy. For that, we need our power will rise, and because of that, renewable energy demand is rising day by day. That's why our EPC portfolio is high. But as you have seen in this quarter, our IPP revenue mixture have been increased from 10% to 17%. So we are also focused on IPP
Right.
asset creation, and gradually our IPP will increase. This is our long-term plan.
Right. Afan, finally, you are targeting a 40 to 50% revenue CAGR through FY30. Given that the 15% revenue growth in Q1, what needs to accelerate from here to remain on track for the guidance that you have given?
We are going, we have, as KP Group have always given that we will grow to 40 to 50% quarter to quarter, and we are on that track. As you can see, our healthy order book, we have order book of more than 4,000 crore. So we are, and I have explained, we have to anyhow commission this project within 18 months. So you will get this number converted into revenue in next quarter also.
Afan, appreciate you speaking to us on ET Now. Thank you very much for joining in.